AIM-listed Echo Energy is an oil and gas exploration, development and production company with onshore assets in Argentina. With an eye to the future, the company recently announced a move into renewables with an option to acquire an interest in a Chilean solar project. Chief Executive Martin Hull joins us today to tell us all. Hello, Martin. Good to see you again.
Hi, Alan. Good to be here.
Excellent. Excellent. I'm going to bring up a corporate overview slide. Before we go into detail, can you just provide viewers with a summary of the Echo investment proposition?
So absolutely. Echo Energy, I think, is a very exciting investment proposition. We're a LATAM-focused energy company. And I say energy because we are across the spectrum now. We've got assets in Argentina, in Chile and Bolivia. And we do have a material oil and gas position with a substantial and actually growing revenue. So we produce today. You can see our production last year averaged and is currently about 1,570 barrels of oil equivalent a day. We've also importantly got a substantial reserve position. So that gives us the room to grow. And we've got a markedly improved financial situation now post what was a very difficult 2020 with the oil price crash and the energy price crash, which since then prices have come up, but also we've had a successful debt restructuring to the extent that we are actually in the first half of 2021, we were profitable at the gross profit level with driven by many things, but one of them was the strong cost control that we as management implemented. In terms of our assets, we've got a very much an opportunity-rich position in Argentina. Lots of scope to grow, and I want to talk about that in some detail later on. But also now we've got an exciting renewable strategy and our first steps into that segment. And of course, as an energy company, we're highly leveraged to what is really a positive time in the commodity price cycle. So that leaves us looking very exciting and excited about the future.
Excellent. When we spoke last year, you'd already seen a transformational period in the company's growth, driven, of course, by production increases at Echo's core Santa Cruz oil and gas assets in Argentina. You reported also a further production increase in Q4. But before we get to that, there is a lot of interest, of course, in your move into renewables. And I've got a slide here that takes us through the renewable program. Can you take us through, firstly, the rationale behind investing into the Chilean solar project?
Yes. So look, this is a new move for us, and I think it's one that will excite investors. It's something that the board has considered in a lot of detail, and is an addition to our existing business. So look, our strategy is to identify winning projects with strong fundamentals in the renewable space, to come in early with the right partners and then de-risk those projects to commercialize them to their maximum potential. And we will do that by leveraging Echo's strong capabilities in the technical, in financial and transactional space. And then the goal is to monetize those opportunities, and we will look at the best way to do that, sell them, financially restructure, or generate the cash flow that we can use elsewhere. And I think Echo is uniquely placed. Our operating areas, LATAM, and the resource there is fantastic. We're the right scale for these kind of projects. They make a difference to us on the positive, and we also have the existing relationships and the technical capabilities that I've already mentioned within the team. So, and why do we want to do that? Well, I think in the first instance, there are strong financial returns potential in the projects that we're looking at. It is also very important that we're diversifying from our single position in Argentina, and that gives us diversification, which is very helpful. We want to do it with, the first transaction that we've done is really an important first step. And it's important to mention that it's an option, it's not a commitment. So we can now decide whether we want to make the commitment in due course if the finances work for us. It is a smallish project, 3 megawatts in a perfectly situated in a very high rate resource base in Chile. And critically, this transaction has very attractive pricing. We're acquiring a 70% interest, but effectively at ground floor terms. So we're coming in just paying our way. We're not, giving a significant acquisition price up front. And again, to be able to do that kind of a transaction is a real positive for Echo and for its shareholders. I do want to talk a little bit about the funding, because the renewables space opens up new funding for us. Funding that's not coming from the existing oil and gas business, but opens up the potential for non-recourse project finance that wouldn't be dilutive to existing equity shareholders. And that's one of the things that we're incorporating into our option, to see whether we can get that funding and can grow without taking money from other parts of the business. And of course, this is an important thing to attract new investors with an ESG angle, and that's something that we're focused on as well, bringing in new investors to the Echo story. So overall, this renewable strategy and the moves that we've made already strengthen Echo, and they enable us to grow continued in a profitable way, and it does not detract from our existing business.
Excellent, excellent. So given Echo's current market capitalization, it seems that the market has yet to appreciate the value the additional oil and gas sales will bring into the company. And of course, these are all driven by commodity prices increasing on the back of global economic recovery. Can you talk us through the outlook for the Santa Cruz assets?
Yeah, so look, I think this is a useful slide to just think about where we can grow within our Santa Cruz asset base, which is the core oil and gas piece of the portfolio. And investors will have heard me talk about some of these buckets of growth in the past. But we've got our current production. We've improved our infrastructure over recent months, and that has had an incremental benefit. And there's a little bit more that we can do there. There's the cycling of existing oil wells. But what I do want to talk about in a little bit more detail is our very exciting workover program and the growth that can bring. And that is in the brownfield, what we call brownfield. So it's lower risk opportunities with existing wells. You're working over the existing wells. It's not about exploration. But in addition to that, we also, within our portfolio, have some new greenfield opportunities. We've got the testing of the well that has already been drilled, the Campo Limite well, which would be about expanding our reserve position. And there's also the Monte Ayman development, which again is in the kind of the growth new field area that we continue to look at.
Excellent. Okay. The latest company presentation on the Echo website looks in detail at the upcoming well intervention program. I've got that slide here. Can you talk us through the upcoming workovers?
Yeah, so this is really a very important feature of the portfolio, and again talks about the opportunity that we have within SCS, Santa Cruz. So we have a long list of workover opportunities, because there's a number of wells, existing wells within our portfolio, which have operated in the past but aren't producing today. This is just a list of a tier one. We've worked through that whole list of portfolios, and this is a tier one, the high graded ones. And you can see that from there, I won't go through each in detail, but we've split out each of those opportunities, the potential within a range that the production can be achieved, we think, given the analysis that we've done, and the broad sort of range of costs that it would take to bring those online and to be producing. Now, of course, those are our estimates, and things can change, but those are our estimates, and they show that for not a lot of money, we can increase production by doing these workovers, and that is something that we're very focused on. Now, of course, some of these have a little bit of risk, but very much brownfield, lower risk opportunities. If you add all those up, just from those tier one, workovers, some of which are oil and some of which are gas. But you can see the potential there, and we've got it at the bottom of the slide. On the gas side, it's about 1,300 barrels a day of oil equivalent barrels a day, and then something around 350 just for the oil itself. That's on an unrisked basis, and that's adding up those numbers that you see there for each of the workovers. But that is the huge potential that we have just from the tier one workovers, and really is very exciting for us. What we're working on is making sure that we have the cash flow, the operations in place to conduct those workovers in the field, and we want to do those as quickly as possible.
Okay, and of course, well, I guess if you add those numbers on to your current production numbers, that's almost doubling production from upgrading these tier one assets.
Exactly, and remember, that's just one of the buckets that we saw on the previous slide that excludes the new developments, etc. So the opportunity is there. It's getting after it and balancing it with the cash flows that are coming out of the assets at the moment.
Excellent. Of course, we've mentioned commodity prices already, Martin. They're pushing all-time highs. Can you talk us through? We've got a slide here to look at that covers this. Can you talk us through this?
Yes, absolutely. So look, it is an exciting time to be running an energy company, and I think we are perfectly positioned for the commodity price uptick. However, it is worth just remembering that we had to go through 2020 when the situation was very different, and we're still paying the price of that. There are some creditors that we're still working on in order to fill that gap that a very tough 2020 led us to. And you can see that. So on the chart for Brent oil prices, you can see that Brent went down dramatically, and we had to survive that, and we had to cut costs, we had to shut in production. And the key though is that we're out of that, and look at that where the prices are now. Brent consistently above $80, and we are producing today, so we are getting the benefit. This is not about future value. We get the benefit of that today. The situation in gas prices, which is actually the bulk of our production, is far more dramatic and far more positive for us. So you can see on that chart there, we're highlighting European prices just because that's an interesting data point, but the story is very similar for Argentina. However, the thing I would really like to highlight is that we sell most of our production, our gas production, under long-term contracts, and the contract year runs roughly from April to April each year. And so the gas that we are selling today was the prices of which were negotiated in March, April last year, and you can see from the chart where prices were then. We're still selling at that price. However, we're just coming into the period where we will be negotiating and beginning the contracting for the new gas year. And I think we can all see, what has happened to gas prices since last year to this year. So we're looking to renegotiate that contract at a different level, and we would hope significantly higher. Now, I'm not in a position to predict prices going forward, but we can all see where we were last year to where we are now. And this is the time when we'll be renegotiating those contracts. So look, that is something that is very much in the near-term horizon, and something that we at Echo are frankly very excited about.
Excellent. Coming on now to the company itself, Echo has of course just raised 660,000 gross in a placing, along with the VAT refunds and revenues from gas and oil sales. How do the company financials look at the moment?
Yeah, so look, there's no doubt that we have had a difficult time. But we took the steps in the past to rectify that, and that is coming through in the figures that we're seeing. By raising the money, by getting the sales out, by accessing higher prices, the position is markedly improved. So as we know, we saw in the first half of 2020 a profit, and I think it's the first time that Echo had ever made a profit, which is really great to see. And I think that again reflects the action that we took and the strength of the fundamental business. So look, I am much more confident about where we are today than where we have been in the past, which is exciting. And again, the rising gas prices, commodity prices in general, but the rise in gas prices in particular is going to play straight to our revenue and obviously then straight to our bottom line as well. It also is very much a virtuous circle for us, because the more cash that we generate, the quicker we can get after those workovers and those upsides that we've talked about. It is a balance, because we never want to put the company at risk in terms of overextending ourselves. So we want to be cautious and do it step by step, but generating more cash flow allows us to get after the growth and do more to grow production and revenue ultimately.
Excellent. Well, Martin, we're running short on time. Before we wrap up, what milestones should investors be looking out for in the first half of 2022?
So again, it's going to be an exciting time. We've talked about the commodity prices. We've talked about the renegotiation of the contracts. That's something we're focused on, and that will be in the months ahead. We've been very focused in recent months as well, and people will have seen, investors will have seen the benefit of this is increased oil sales. So we're actually monetizing at good prices what we're producing, and I expect that to continue. We talked about the renewables. We are excited about that. I think there is going to be potential for news flow. Again, it's an option, not a commitment. So we're going to be looking at the finances. Can we get the good debt, the good non-recourse funding to move ahead with that? And there could be some news flow around that. And meanwhile, of course, in the base business, we are working hard to drive forward production and get after some of those opportunities that we've discussed in some detail.
An exciting outlook indeed for 2022. Martin Hull, Chief Executive of Eco Energy, thank you for joining us today.
My pleasure. Thank you, Alan.